Hello guys, welcome to another Scholar Trading video. In this one, I'm going to make it very brief. I'm going to show you how to backtest properly. Now, I made a few videos prior and then I realized it's incredibly long for how simple this is supposed to be. So let me try to shrink this down to a few minutes. All right, as you've seen my previous videos, I tend to be a little bit long-winded, but it's not on purpose, I swear. I just want to be precise and thorough. But yeah, anyway, so what you want to do, get your TradingView out, get the pair that you want to backtest or the specific stock or index, whatever it may be. I'm just picking NZDCHF because I never do this one. So just to give you an example, it's not like it was predetermined with any other method. It's just something I chose randomly. Okay, so what you want to do is jump onto a higher time frame and just pick a random point in time. So now we can see the past 8-9 years for NZDCHF on the weekly time frame. Ideally, you're not trading for a year and a half on a specific currency pair because, I mean, if that hits stop loss and you've been in the trade for half a year, that's going to suck, right? So ideally, you want to employ a strategy that especially for Forex that last maybe a few days to a few weeks tops. You don't want to be in trades that are months and months long unless you really are seeing something that could potentially make you a 1 to 50 risk to reward ratio. So anyway, first thing that you do, hit replay mode and pick a random point in time. Now I just want to state that if you drop down your time frames to the 1 hour, for example, it only goes back so far, right? So watch, if I hit back right here, 2015, and then I go 1 hour, you got it right here, data point unavailable. We don't have historical data for this resolution this far back in time. All right, so what that's going to tell you is 1 hour, like 8 years ago, 9 years ago, not going to be so good. All right, however, you can hit the replay maybe 4 years ago or 5 years ago to 2018 and then hit the 1 hour time frame. And oh look, here it is. All right, so if the 1 hour works about 5 years ago, anything higher will definitely work as well. Will the 30-minute work? No, we get the same issue, right? So this is how you kind of test to see how far back it goes. And I mean, I'm kind of doing it for you right now, but just to give you an example. But yeah, let's see, 2019, will it go back that far? 30 minutes? Looks like it's good. So 2019, it's about just under 4 years, 3.5 years ago near the end. That seems to work out pretty nicely. All right. So whatever the case may be, pick your point in time that you want to start your replay and implore your strategy, right? So if it's scholar strategy, make sure you get the right indicators on there, which is this one. And then you're going to see on the 1 hour, right? They're going to appear. And this is a great way to test a specific strategy that requires time-sensitive pivot lines, for example, right? So I'll turn that one off. Another one would be like if you want to see the Camarilla pivots, there it is in that particular time frame. Let's play it forward. And then you see the next ones appear, right? So it's great to see which strategy you want to employ. Like this would be central pivot range. There's others that you can backtest as well. So QQE signals I see as a popular one that's being thrown around on Facebook, but I'll show you what this looks like. So it may be a little tempting to do the shorts and longs, but now this is a great way to backtest this specific thing because you'll see if they're actually worthwhile. Because you see a lot of them, it's like, oh wow, if I got it way over here, I could hit TP. I'm like, yeah, but like I'll show you how this is going to look like. Some of them could go 120 pips in profit and smoke you back into your stop loss, right? Just going off of these alone is not a great idea, right? So let's see when the next one appears on the 1 hour. Okay, so now we hit the long. But the long, let's just go right there, okay? We'll clip it right where it happened. All right, so watch. One candle forward. It hits the long at the end of the candle. All right, so let's say, for example, we take a trade right there. And, what's a reasonable stop loss? I mean, 60 pips. You'd only go 60 pips when it's, that tight. But whatever the strategy implores, right? Let's say you want to go long and just make 30 pips, so 1.3. Not a great trade, but whatever. Okay, let's see how that's going to go. Oh, look, it was in profit briefly, and now you're sitting in the stop loss. And now you get a short signal. Right? There you go. That kind of shows you that not so hot, right? If you want to go for a 0.8 to 1 risk to reward ratio, meaning that you're going to have to win way more trades than lose. Sure, yeah, it's going to be a fantastic strategy, but I don't recommend doing that. All right. So anyway, you can check it out. I'll do a video on QQE signals to go into there a little bit more in detail, but this is how you specifically backtest anything that you want to try, right? Hit the replay, pick a random point in time, do a year's worth of trades with that strategy to see how consistent it actually is. And now remember, you can't just backtest on one currency pair with that one strategy. You're going to have to do multiple currency pairs to realize which are more volatile, which are more stable, because the strategies all work. They just don't work across the entire board the same way, right? Like the Scholar strat will not work on NZD-CHF the same as it is on Euro USD. So that's kind of it, guys. Subscribe and like the video if you actually liked it, and hit a comment below to see me do any actual back tests, and I can make them longer videos, and I'll go into more specifics to show you how to do that in greater detail. All right, see you in the next video, guys. Thanks so much.